Good afternoon, everyone. Welcome to Hit the Bid here on May 31st. This is Ty Robbie here with your Week 22 Market Watch. Today we're going to run through our charts and see what happened in these markets over the last week and see what we need to be ready for as we head into Week 22. So let's jump in and get started. First on the board today, we got our August live cattle. Last week we did see these bulls put together a brief rally attempt before seeing a pretty weak finish into the close on Friday. This market just not really able to get much of a rally attempt going there, as we did see that selling pressure just be too much late last week and setting up for some weakness here as we head into Week 22. We did see last week with a short trading week, Tuesday session opening up here, balancing out on either side of 240 before we got that rally attempt underway there on Wednesday. Price pushing up there towards 244, but we just saw this market run into a nice little pocket of sellers here at these prior week's value area highs. Too much resistance up here, keeping this market capped for the week. We did see Thursday session try and get a rally going early, but once again, this 243 to 244 area was just too much for this market to handle. Sellers eventually pushing this thing lower here into the weekend. Friday session losing some ground there, closing the week at 239.20, giving the bears a chance to strike lower here in the week ahead. That week close is not a good look for the bulls at the moment, finishing back again once below that 50-day moving average and failing to get that rally attempt going last week. Just not a good look here in the near term. That being said, this 237 line continues to be the line to watch. If this market is able to continue to find support here, balancing out between 37 and 41, those bulls could try and put a rally attempt together again, but last week's action just showed there's too much resistance overhead for them to get a real meaningful rally going, and it looks like these sellers are going to try and strike lower here in the near term. If we are watching this market in the week ahead, this 237 line is going to be the line to watch. Any offers below here should see this market to start to accelerate to the downside. Look for more volatility and selling pressure start to pick up in the event of a breakdown below this level. We should anticipate a fairly quick markdown here into this 230 to 232 area. This prior demand zone that kicked off this recent uptrend is going to be the next spot for those buyers to step in and try and support this thing. We'll have to wait and see how this market responds once we get down into that area. But just be cautious here as if we do start to get offers down here below 237 in the week ahead. That'd be a good time to start getting defensive, start to raise some cash, as we could see some near-term volatility in the event of offers down here below 237. Those bulls have a chance to keep this rally going, but just this overhead pressure has just been too much recently. We are seeing lower highs and lower lows in recent weeks, so looking like we've got a downtrend shaping up here in the near term. Resistance up there at that 244 area and that 20-day average last week, just showing that the sellers are in control here at the moment. Look for them to try and strike lower tomorrow. Anytime throughout the week ahead, offers below 237 should get the selling pressure underway. Bulls are going to have a battle on their hands here if they want to keep this market supported and get back up into an uptrend. They got their work cut out for them. We might need to go through a little bit of selling pressure here in the week ahead. Be cautious. Any sort of offers down here below this level is going to be a good time to get defensive and steer clear of this thing while we could see some volatility in the near term. Next up, we got our August feeders on the board. Similar action here, but this feeder market has shown more weakness than that live cattle market here in recent months. We did see this market opening up last week down here well below 350. Brief rally attempt up there to close that gap from that limit down, gap down move we had in the prior week. However, those bulls just weren't even able to get back there above that level, get that gap closed. Too much resistance overhead. Selling pressure is just too great here at the moment. This market eventually settling back down there below 350 into the close last week. Not a whole lot of good news here at the moment for this feeder market. We could see this thing continue to balance out here in the near term, but that selling pressure just looking like it's going to be too much at the moment. Look for any sort of offers below Friday's low at 346.50 to keep the selling pressure on. We could see continued wide ranges and more volatility here in the near term if this feeder market continues to get back down here below this area. Bulls have their work cut out for them in the week ahead. They need to get a finish back here above 356.22, close that gap from the prior week before they want to talk about any sort of upside. At the moment, though, we are seeing this 20-day average now cross back down below that 50. Continue to see resistance at these averages, even that long-term support line at the 200, putting pressure on last week. This feeder market's not looking very healthy here at the moment. I'd steer clear of this thing. This thing's going to continue to see some wide ranges and volatility. Wait for this chart to clean itself up, offer some better risk points to trade around. In the meantime, steer clear of this thing while this feeder market could continue to see some downside here into the week ahead. Next up, we got our July corn futures on the board. Last week, we did see this market push down here through the bottom end of this range. We are seeing this thing start to unravel a little bit here. Week finish there on Friday down there below 450 at 447. Opens potential here for a downtrend. We need to see these sellers continue to strike early next week. Any sort of offers below 445 should push this thing down here towards 430 to 435. This pocket of buyers down here has been a spot that has kept this market supported here over the last year. This big bounce here off of this 430 level we saw back in August of last year has kept this market kind of held up above it. So that's going to be the next spot to check down here if we do get any sort of offers below 445. However, this corn market has been given a lot of head fakes here recently. We have seen some closes beyond some of these edges, but each time we just keep getting sucked back here into the middle. Wouldn't be surprised to see this market push back up above 450 and stay range bound in the near term. Finishes above 450 this week will keep this market in this 450 to 485 range. Not expecting any major directional moves, just some wider daily ranges in the near term and more choppy action for this corn market. Next up, crude oil prices continuing to see some downside last week. We are starting to get some developments in the Iran war situation that could be pushing this market lower. We continue to see this thing bleed with some lower highs here in recent weeks. Not really getting those spikes like we once were. The volatility is dying down. We are seeing some tighter ranges, but the news is still out there, and we are still going to potentially have some spikes given any sort of talking points around the Iran war. However, this market continues to bleed lower, not expecting any major upsides, and pops back up here into the mid-90s. Wouldn't be surprising to run into some more sellers. As I said, we continue to see some lower highs here, so rallies should be sold into. This market looking like it's leading lower, and this will always lead the news there. So look for this market to keep on bleeding back down here into the 80s with offers below Friday's low at 86.35. We should see this thing start to flush and back down here towards 80 bucks. This thing still has been range bound inside this big $40 range that we printed back here on the 9th of March, so wouldn't be surprised to see a little bit of a pop, like I said, into the mid-90s, but not really expecting any up moves to be sustainable. Look for this crude market to continue bleeding lower here throughout the week ahead. And next up, equity markets continuing to rise here. Good upside across each of our indexes last week. New all-time highs across the board here as well. The S&P just continuing to drift higher up there towards 7,600. The NASDAQ pushing up into 30,000s last week, while the Dow did get a brief run up there to all-time highs on Monday, and a nice strong finish here on Friday as it is showing some strength here recently. Getting a nice break here back above these prior all-time highs. The stock market continues to show relentless strength. A lot of good spots to be putting money to work out there still. Not expecting any sort of major breakdowns. In the event of a dip down here below Friday's low, we could see a pullback towards that 20-day moving average, but we anticipate dips to be bought up. This market continues to have a very healthy environment here at the moment. Look for these equity markets to keep on climbing here throughout the week ahead. That's all we got for this week. Thank you everyone for tuning in. We'll catch you guys tomorrow night for closing comments.